When you go to your regular CPA, your normal financial planner, your normal things, they don't talk about all of the ways that you can make the bottom line, what you pay in taxes, much, much lower. But also plan for the retirement, plan for investments, do all that. They don't bring that piece together that this program really can do.
All right, what's up, everybody? Thanks for joining us for another week of Wealth Webinar. I've got Mr. Zach Newberry heading up the Fractional CFO program, which you're going to hear all about that. I got none other than the master of disaster, Mr. Snaggy, the guy that keeps me safe and out of harm's way in WTF when I go off the handle. But you know what? Today in WTF, we had over 4,800 likes. So I think people like the arguments. I don't know, but we're not going to argue today. What we're going to actually do today is we're going to get down to some really important things. You know, I kind of sum this up and I look at it and I just say, all right, if you had a small business, what would you need? Like if you had a successful small business, what would be some of the things that you might need to get your business to the next level? Nick nailed it. So that's exactly what I was going to say. A good coach, a good mentor, somebody that could coach you to get to that next level. I know for my business, especially Private Money Club, I brought somebody in to mentor and coach the entire team, somebody that knows how to build a $350 million company, and I don't. So we had to find somebody to do that. There you go. Give me a line there, Stephen. Not only that, if you had a big business, what would be somebody that would be really important on your executive staff, folks? What do you say over in the chats? What would you need? Key person that you would need in your organization to scale to the next level. Okay, CFO, that's absolutely correct. Finance person, yep, CFO. What else would you need? Investors, maybe, maybe not, but that's a good answer. You'd also need a board of directors, right, to keep everybody doing the right things, right? You know, if you got a two-way decision and you can't make a decision, the board comes in, looks at it from a completely disinterested standpoint, and then helps make the decision. So you might need a board of directors. And then how about the general public? Where do they get their advice from? You know, any of you, I'm sure CTO is a really important one, especially for a company like Private Money Club. Fortune teller, good one, Sam, good one. But all right, so if you were looking for financial advice, where would all of you go? Besides here, you guys don't have to cheat. YouTube, I love that. And it's funny, Nick, you know, we were just talking about that. People get almost all their knowledge now on YouTube. That's why we spend so much time and money putting YouTube up. But where else? You know, I'll give this one to you. Financial advisors, wealth advisors. We hear it all the time. I just got a call with one of my really good clients. You know, they had met with their advisor and their advisor was trying to tell them everything that we set up for them should be canceled. You ever get one of those, Stephen? Oh, that BYOB policy. We should cancel that and buy term. That's exactly what they said. You should get rid of that really good, specially designed and engineered whole life and buy term insurance. I about hit the floor. Yeah, but that's some of the advice. So you're getting advice from financial advisors. Well, all of those things are the right answers. If you want to get to the next level, you're going to need different things. But now let's look at what the wealthy do. You know, we're always trying to not just talk about the obvious things like we just did. We're always trying to bring to you, our audience, and every one of our folks that we're trying to help. We're trying to bring to you what the wealthy do with money. Because what the wealthy do with money, we'll call it the 1%ers, is very different than what most all of us do with money. And why is that? Have they evolved to another level where they need that caliber? Well, maybe yes, no. I think a lot of it has to do, they've learned wisdom. And also they've gotten to a certain point where they can attract the right kind of talent that maybe you, me, and everybody else on here cannot attract. And I think that's really a big part of it. Not only that, they can afford to pay those people to do what they need. I will tell you right now, depending on the level of wealth, but the 1%ers, they all work with a family office. All of them have a family office, a team approach. Someone that looks at everything that they're doing and can give advice, not just on taxes, but on wealth things. They can bring deals, okay? They can bring opportunities to that family and say, hey, listen, we found this really good opportunity. It's not an opportunity that's available to the public. This is something that's only available because we know this person. Things like Inicio, which is a fund that we put together that I'm a partner in and Stephen's a partner in. Inicio gives folks the ability to invest money into deals that we're doing, deals that our entire team is doing background research on. But the bad news for Inicio is Inicio is private. So unless you're part of the wealth webinar or you're part of one of our programs, you don't know about Inicio. You'd never have any any exposure to that. You'd never be able to find an investment like that. And the same thing, a family office for a wealthy family, that's what these people are there to do, to go out and find opportunities like Inicio, opportunities like some of the other private funds that we've done like Safari, and on and on and on. Some of you were on here when Justin was on here and he was talking about his hedge fund. That hedge fund's not available to the public. It's available just because you were on that webinar. So like those things really make a big difference in a wealthy family's, ability to grow their wealth, ability to protect their wealth. And we're definitely going to spend some time on protecting wealth today. But, the problem is, hey, you don't have 10 or $50 million to invest. So there's no way you're going to get Andina Family Office or any other family office to really even take your call and talk with you. They'll be nice, but, deep down, they're like, no, you got to have at least 10 million for us to work with you. Right? Wouldn't that kind of sucks, because we want all that. We want tax advice. Now, let me go to another thing. Stephen, let me ask you this. You got a CPA, don't you?
Yes.
So how many times a year do you meet with your CPA to do tax planning, to look at really cool opportunities to get tax deductions or things that you could be doing where your CPA actually says, hey, maybe you should consider doing this, or maybe you should consider doing that midway in the year? Does your CPA do that?
Yeah, just recently we started doing quarterly.
Okay, so you got a good CPA, but all right, let's go to the audience. How many of you on here meet with your CPA quarterly to do tax planning, to look at different things you could be doing from a tax standpoint, reviewing last year's taxes, reviewing where you're at this year annually? Okay, so come on, somebody's got to be like Stephen, and they've got somebody that does it at least quarterly. Anyone?
It's going to be about maybe
Bueller.
5% of the group, if that.
I have a guy quarterly. Okay, Drew does. Hope does. Michael does. So I'll bet you any money for all the people that are meeting with their CPA quarterly, I bet you they're paying less in taxes than the rest of you that said no. Actually, I'd almost guarantee they're paying less in taxes or doing better on a tax standpoint. And why is it that, so Dexter, why is it that your CPA, same as my old CPA, only meets with us once a year? What are they doing once a year? Your tax returns, right? They want you to give them all the stuff just at the end of the year, or maybe, some of you don't get your CPA call until what, March or maybe February? You got to give them all the documents, all the 1099s, everything. You just hand it all over. And then all of a sudden, poof, you get back a return. And I know my old CPA, and if he's on here, then good, like you're fired. But if you get your tax return, like how many of your CPAs actually walk you through and help you really understand what's in that tax return? Mine never did. But yet it's almost like, here's your tax return. Be thankful I got this thing done for you. Don't ask any questions. Oh, and by the way, if you want me to explain something, set up a call with my secretary and we can kind of go through it.
And they'll charge you another hourly wage.
And they'll charge you another hourly wage. See, I know all this because I've been through this over and over. Zach was a CPA and a CFO for a couple different companies, which we're going to get into. But, here's the problem. We all want Stephen's CPA or some of the other folks that, said that they're meeting with their quarterly CPA that does that tax planning. But, it just comes down to taxes. So what if you're meeting quarterly with the CPA and then you've got, you need some advice about your portfolio, your 401k and your brokerage accounts. Are they going to help you with that? Nope, that's somebody else. And then what about over here on your debts and all the leverage that you're trying to use for your home equity line of credit, your lines of credit, your credit cards? Like, is your CPA going to help you organize all that, find a way to pay your debts off? No, probably not. That's somebody else. So you see what I mean is there's a different person for everything. You want a financial plan written. Maybe your financial services professional can't write the financial plan, so you got to find a CFP. So you see what I'm saying? A family office has all those people. They have the trust they have the trust person that's going to structure all of your protection for your assets. They got the CPAs, they got the bookkeeping, they got all of that stuff under one roof. So that family doesn't need to go anywhere else. Come on, how many of you want to work with a family office? Real estate investments, like that's somebody else. So wouldn't it be nice if you just had one person that just helped you with all of that stuff, that helped you get resourceful with everything you're doing? Well, that would actually look a lot like someone like Zach. And then if you want to hire Zach, how much are you an hour?
200, 250 an hour.
$250 an hour. So you can hire Zach, 200, 250 an hour. That's going to add up pretty quick. So that's an option. You could find somebody that would do that, and that's going to give you the tax planning side of it, but you're going to lack all the rest of it. Stephen, what are your thoughts on that? Like what the wealthy do, and why don't we have that accessible to us under one roof?
the stuff's just not taught in school. So it's stuff that you have to go out and you have to seek out. You have to find, not only somebody that's willing to introduce you to it, but then also somebody that's willing to take it on and help you. And for most, just like financial advisors, for most accountants, unless they're doing enough business and have enough businesses and financially, it's just a lot of times financially it doesn't make sense for them to put all that extra work into it and find all of it. But, our mentors, say it best, there's two tax laws in this country, one for the informed and one for the uninformed. Both are legal. Like, which one are you following? But I just think it boils down to like everything. Why don't more people self-direct? Why don't more people become their own banks? It's just stuff that's not commonly available. So
Zach, what do you have to say about this? As a CPA, when you operated as a CPA in corporate world, like how much planning did you guys do?
Well, it's even on this side. It's on the personal side. You don't get it for the most part. I'd say there's 5% of CPAs that will actually spend time sitting down with their clients and saying, these are the things that you can do in a small business, things like that you can take as deductions that just if you properly track them throughout the year and even know they exist, can save you thousands on your tax return each year. But they don't do that. They'll only take the time to congregate the information that you did. They'll do your tax returns, give it to you. They don't spend the time doing that, talking about opportunities in the way in the following year, what plans, what things might be different, what challenges do you have, what opportunities do you have coming down the line, and passing on that information usually stops right there. And like Steven said, it's the time on it, right? Is they have the time to do tax returns. They take on as many clients as possible so that they can charge their rate to do that. And they don't have the ability to add those pieces. And very few CPA offices will even have those different categories of things in their office. Like, some may have a lawyer that can help out with, structuring and different things like that. But very rarely will you have a CPA office that has those other opportunities that can help you out. Like you said, you're going other places to try to piece that all together.
Yeah. Now, let me ask another question here, and this is an important one. So let's do a two-part question. Out of everybody on here, we got about 130 some people on here. How many of you have somebody that reviews your tax returns after your accountant gives them to you? Like, you get your tax return, but then you hand your tax returns off to somebody else and they review everything to make sure it's correct, make sure there's nothing missed, make sure that there doesn't look like anything's out of place. Anyone have that? Steven, do you got somebody that reviews your tax returns?
I actually don't. I mean, when I went with the new company a couple of years ago, they did take a look at the previous years, but it's not something I do commonly now.
And I think, even if you've got a really good CPA, like any of you have a good relationship with your CPA? Not anymore, but yes. Yeah. So, all right. So all of you have a really good relationship with your CPA. So you would never change your CPA. It's a pain in the ass, right? You got to change everything. You got to get used to the way that the new person works, right? You don't like changing your CPA, but you're probably a lot like me and a lot like Steven, where sometimes when you get your tax return, I mean, I could show you mine. It's like 40 pages long. You don't really know what you're looking at. You're kind of like, all right, well, I guess it looks good. I owe $150,000. Cool. But you don't really have somebody to just put a second set of eyes from a completely different look, somebody that really knows your whole financial picture. They know where your investments are. They know what your debts look like. They know what your holdings in real estate are. They know what you're doing, what your goals are. They know the entire holistic picture. Like, wouldn't it be cool if you just had one of those people that knows your entire picture, has it all documented, and then says, hey, let me see that tax return. You guys go on vacation or something. I'm going to review this and I'm going to make sure nothing's missed. And then they can mark it up, send it back, and then you give it back to your CPA and you say, hey, not for nothing, like, you missed a couple things. Your CPA would be like, what? Now you're the expert? No. I got somebody on my team that just reviewed this. And, I think you did a great job, but you missed this, and this. Remember I told you that we did that big event at our house like that, and we paid ourselves, but you didn't give me, you charged me tax on that income. So like all that stuff is just, that's really, really important, because you got to have somebody overseeing this stuff. You got to have somebody really looking at this. And if you don't, you're just going to take it at face value. And for me, here's what we're going to really get into today. I'm just kind of framing it up. A lot of the issues that have happened, okay, in all of our lives are because we just don't know what we don't know. And the wealthy individuals out there that do things, like, they have teams that review this stuff. They have teams looking out for this. So really, the wealthy families, really what they're just doing is they're just pushing the needle. They're just focused on the vision. They're just keeping all their businesses moving forward when somebody else is handling everything. Somebody else is doing all of this stuff. And in doing that, they seem to just get further faster. So That's what I want to do. I want to really dissect that. And I want to let all of you know that we have created this. It's taken us a while. It's taken me and Zach, Steven, Shauna, the entire team a while to create what you're going to hear about. And some of you have already heard about it. Some of you are already clients of this, because we did kind of a beta test, but we're really going to dive deep into it. And this is the drawing I did. Now, anyone know where this comes from? Can anyone see this and tell me where this comes from? Because I know someone in here probably knows this. It's one of my favorite books for Vivi. Pac-Man. Okay, that's pretty good. Pac-Man. Okay, hold on. Let me try one other thing. All right, so everybody thinks it's Pac-Man. This is a children's book. It's called The Missing Piece. Shel Silverstein. So we're going to call this The Missing Something. I don't really know what it's called, but I love it. And this is basically what you're missing in your life. Is you're missing a CFO. You're missing a chief financial officer in all of your affairs. Well, all the affairs, financially that you want to do. That's what you're really missing. But we're going to bring it to you. We're going to bring you everything that a family office would bring to a wealthy family. And I'm going to turn this over to Zach for a second, because I want to explain this simple model right here. And Zach, have on at it.
This simple model here is when we talk about the fractional CFO, the big piece of it is that we find your full financial picture right at the start. We find out everything that you have going on when it comes to operations, different things that you may hold, different things that you have going on in your life when it comes to your income, your expenses, what your budget might be. If you don't have a budget, we'll create one for you. So the big piece of this here is kind of just a basic structure that once we start to figure that out, that we would want to walk you through and have you set up and how to make all these different pieces go together. So on one side, you're going to have your operations, which will be either an LLC or S Corp. If it's just a disregarded LLC, the S Corp doesn't come until you've actually developed into it or have enough income in your operations. And that can be something that we'll talk about a little bit later. Is there's more tax advantages and less audit opportunity when you have an S Corp versus an LLC. But this is going to be your operations. So this is actually active income that you have, and you want to keep that on one side of everything that you do. And that's kind of why we have that separated is anything that you do in your operations. If there is anything that ever does happen where there's a legal liability or something like that, you want to make sure that everything else that you hold in life, assets, different things like that, are protected and not something that is going to go after at that time. So that's why you have, again, on the other side is you have your holdings that you have on that side. So this would be whether it's a lending LLC, your different maybe rental properties or different things that you have, life insurance that will go through, different investments, your personal home. All of those things are things that you have on the holding side that you want to keep away from anything that you have maybe going on in any type of business. So this is kind of like your active income, things that you're doing over here, and then things that are much more passive. And this is why also things that are passive don't necessarily need to go through an S Corp, because passive income has different tax regulations, have different things on there. Also then with all of that, everything that you own, you want to have flow through a trust structure that you have ultimately as things get set up there again for that extra level of asset protection, tax planning, different things like that. They have fully set up. So this is kind of just a basic, I guess, structure or grid or thing that you would want to follow on a general basis for us to work through that. As we go through the fractional CFO, we find out which of these things do you have? How do we make your operations maybe fund or accumulate more holdings, different things like that, how you can bring your life insurance to do that and build through the process of what you have going on and where we can grow from there. Starting that even if you don't have anything that is on this here at all, and it's just, I just want to get out of debt. I want to go through, I want to figure out what my financial wellness is and where we can grow from there. Or I have almost everything that's on here, but I don't know how it works together. Everything that I've learned in money school, everything that we go through with these webinars, I take all that in like a fire hose, but I don't know how to make it all work together. And so that is a big piece that we do within the fractional CFO program as we go through the whole process. Basically take where you are now, where your goals are, where you want to get to, and we build that roadmap from one end to the other and figure out the different pieces and how the puzzle fits together as we go.
I think the most exciting part about this is all those things we talked about earlier that require a different person in there, all those people that you have already in your stratosphere, or whatever you want to call it. You probably have a financial advisor, maybe an RIA. Many of you already said you had a CPA. Some of you probably have bookkeepers. Some of you have a relationship with someone that sets up your entities or sets up your trusts. Like, you have all that stuff, but you don't have anybody looking at everything as one and then giving you solid, structured advice on all of that and helping you organize it all too. I mean, how many of you have a budget? I mean, literally, like, do any of you have a budget? If you don't have a budget, do you have like some type of a written plan as to how you're going to get where you're at? Some type of financial projection showing where you're going to go if you want to do something like build a real estate portfolio? All this stuff is stuff sometimes I just dreamed about back in the day. Like, oh, I just wish I had somebody to track all my private loans. I wish I had somebody that would just keep track of all of this stuff, but I never did until I kind of started developing this with Zach. So many of you, this would be such a step in the right direction for you because it would allow you to focus on the things you are instead of always worried about like, oh, what do I need to trust? Am I at the point where I need to trust? What kind of trust do I need? Is it this trust or that trust? Do I need the complex trust structure that Solomon sets up? I don't know what I need. And not only that, like, do I need an S Corp, a C Corp, or an LLC? Somebody was just asking, why not a C Corp versus an S Corp? Like, these are all very legitimate questions. Should I set my LLC up in Delaware, Wyoming, New York? Like, should I do it in my resident state? Why? What? Like, your head just starts to want to explode the deeper we go in. And then you start getting into taxes and you're just like, I have no idea. I have no idea. And what do? Nothing. Most people get to a point where they get so frustrated at all these decisions that they either do one or two, or they're just like, I'll get to that. I don't know. That's where I was.
Yeah. And I'd say I was there 5-6 years ago myself, right? As I had all these different pieces. I had the life insurance policy. I had the different side investments. I have a real estate portfolio. I had all those things. But even as a CPA, you don't learn how those things work together, right? You learn either the tax side of it or the operation side of it, right? You either go to the corporate world or you stick on the tax side or you do audit. And it's kind of, that's how you learn in the CPA, and you don't actually learn the financial wellness piece of it or how to actually make those things work. You learn the result of them and how they affect your taxes, but you don't know how to actually do them. And so being a practitioner of a lot of the things that we talk about in money school and having that CPA background to do the tax planning, to do that and make it all actually work together is where Fractional CFO program is kind of based off, is things that we wish we had years ago that we didn't know exist, or if it did, only did to the top 1% that we can now offer to anybody.
And I love the questions. Like Deborah's asking, what kind of trust? Does Zach set up the trust structure? Does the trust structure need to be set up first? So like literally, like we're just talking and like, look at the questions that are coming out of here. Would I be able to cancel legal subscriptions? How do I do that? Capital gains tax. I have an LLC, but file taxes in S Corp. You're like, see, these are all legitimate questions that we all have. And as your business and as your financial situations keep evolving, you're going to have more and more problems. More money, more problems, right? Was that Biggie?
Yeah.
More money, more problems. So that's a very true thing. But not having somebody in your corner that understands all of it, or has someone that they can call. I like to use the Henry Ford example, right? Henry Ford, when Henry Ford was asked whether or not he was smart enough to run Ford Motor Company, he articulated that he had the vision, but no, he wasn't smart enough to run all divisions of Ford Motor Company. And I'm sure they're like, oh, here we go. We're going to get him out of here. He can't handle this. But then he went on to say, but I'm smart enough to know that I don't know everything. But I'm also smart enough to find the people and to build the network of people that I'm going to need to get this company anywhere it needs to go. So just imagine this is and we'll just this is a little cord because back then they had to power things up. This is his row of buttons. Okay. So in his row of buttons, maybe he's got his financial advisor, he's got his CFO, he's got his CTO. Not really back then. They didn't have all these. He's got every person that he would need, a CPA. Maybe he's got his marketing person. He's got his trust person. He's got a button for everything. I'm just making them up. And when he needs one, he just pushes the button and then pushes the button. And every one of these is somebody on his team that was smarter than he was, that could answer questions and solve problems that he couldn't solve. All of us need one of these rows of buttons, which actually you all have one. It's right here. But how many of you have time to call every one of these different people? Wouldn't it be nice is just to say, Zach, can you get a hold of my CPA and explain this, and maybe have a call with my financial advisor to kind of talk about what we just discussed about how we want to really structure all this stuff? Like that would be way easier, right? Now you start acting and start operating just like a successful business owner would in a larger company. because now you've got somebody that you can use to help put all that stuff together. And I mean, I've got like a list of stuff that this is, but like, I'm just going to read a couple of them. Financial review, building the path, retirement planning, like how are you going to retire? I mean, yeah, these are all financial advisor stuff. Budgeting, building out debt repayments, financial wellness planning, tax saving opportunities, how the IRS works and different advantages and how to pay the least amount of taxes. What the tax code actually says it right in it, like you should pay the least amount of taxes, or how do they say that?
It's in the ethics for like any CPA ethics, and the way that it works with the IRS is that they want you to pay the least amount of taxes as possible, and that's why the code exists. And so in a CPA ethics is that's what its commitment to is, for you to pay the least amount of taxes as legally necessary. And so that is, and that's in the agreement with IRS. That's how they operate. Yeah,
makes you like the IRS, doesn't it? Let's see what other things. Reviewing the whole financial picture. I mean, there's just so much stuff, but the other thing that we've got here with Money School and the Money Multiplier is we've literally built up a massive team. I mean, our row of buttons doesn't fit on this screen. We've got a massive team. If somebody's really complex, somebody's really got a tax problem where they're paying over 100 or 150,000 in federal taxes, like we have somebody on our team that knows how to build the complex trust structure, like mine, like Joseph's, like Devin's, and like Brent's. It used to just be Brent. It used to be easier. Now there's a couple of us doing it, where we basically have this really elaborate, complex trust structure. Now that's not for everybody, but different levels of trust planning could be for you. There's probably a lot of you that do need some type of trust planning, and you don't have it because you just don't know. I mean, it's a slippery slope out there. Well, we've got all those people that know how to do that, and Zach knows every one of them has the button. And if Zach knew your financial situation, because you can articulate your vision, your dreams, your goals, and your current financial picture, along with who's on your team now, Zach then could help write that plan and figure out what is the best structure by working with the professionals that know how to do that. Wouldn't that make more sense than, to have a CPA actually tell you how to design that versus you just going to an attorney and saying, hey, I need a trust. The attorney says, great. What kind of trust? What are you trying to do? Well, I don't know. I'm just I just want to set up a trust. I don't know. Should I have a trust? Like, what kind of trust should I have? And then you have to go through that whole process, but you don't know enough about trust to know what kind of trust you need to do what you want it to do. All that stuff is super important. Yeah, we're going to be putting up Zach's info, but we're going to talk about the program in just a second. But I want to kind of go back.
But even just like you were talking about on your phone, right? We all have the ability to search these questions, but we don't know when you say you're going to go and to the lawyer, we don't know the questions to ask. You have no idea where to go, where to start, different things like that is because you don't know what you have, what you're able to provide, where you are in anything to know what's the next thing that I need to ask and how I need to work on this. And that's a great thing about the program is it does that. It allows us to know which one of these buttons are we going to go through and make sure that full picture is grasped. And it's something that is, we spend as much time on that first call to make sure that we have everything that we know exists to be able to move forward to make the next steps. So.
Absolutely. I'll give you an example. Back when I was an advisor, one of the things we did with trust planning is Medicaid planning. So any of you know Medicaid and Medicare, how those work? So most of you have probably gone through it with your family, some type of a long-term kind of care situation. They're not fun. You have a family member, their health is declining. All of a sudden they need additional help. Great. So first thing you do is you find out, okay, well, Medicare will provide some assistance. That insurance portion will pay for some of this until all of a sudden they say, hey, we're no longer going to pay. And then you're like, okay, well, great. Now what do we need to do? All right, well, mom or dad or grandma needs to go into, a care facility, maybe a mental care facility or anything. You need to go into some type of an assisted care. So you go in, you interview with them, and there always is going to be that question. Great. Yes, we have all the services. We can take care of mom, and this is what we do, and this is our facility, and it's beautiful. How are you going to pay? Oh, mom's got assets. How much is it for this facility? Oh, it's not that expensive. It's only $300 a day, or $400, or $500, or $600, depending on your part of town. Wait, how much? Did you just say $300 a day? And you grab your calculator and you start doing your math, and you're like, okay, $300 a day. Okay, mom's going to be broke next year. Great. So all those assets that you thought were going to go to the family someday, and all the assets that mom, dad, or grandma wanted to go to the family someday, that legacy, now they're going to pay for that care because you have to spend down everything to almost a poverty level in order to qualify for the next phase, which is Medicaid. So we used to build trust structures and planning for that so that mom, dad, grandma, grandpa doesn't have to spend down all their assets. Now, sure, long-term care would make perfect sense, right? Just buy a long-term care policy. Hey, doesn't that Brian guy, like, don't you got that Brian guy that does those asset cares? Yeah. But you see, mom can't qualify for long-term care no more because most of us wait to the final minutes to get the policy or get the long-term care insurance in place because, we'll get to that. We'll get to that. And then all of a sudden, when you get to it, you no longer qualify for it, or it's just too expensive. So now you don't really have much of a choice. So the trust planning is a lot better because you can set up trusts that would basically move all the assets into these trusts. And now after the look back period, those assets can never be touched. So mom, dad could have $10 million in this trust structure. And all of a sudden, she's got to go to an assisted living or he's got to go to an assisted living. And they say, how are you going to pay? And you just say, well, Medicaid's going to pay. Okay, well, how much does she have her own assets? Well, mom has her house and she's got her car, but outside of that, mom doesn't own any of the other assets. And mom has $10 million in assets in trust, which means mom doesn't own that $10 million. The trust owns it. See, own nothing, but control everything. Mom fully controls the trust. But as long as it's past the look back period, mom, dad, grandma, grandpa no longer needs to spend any of that money down at all, period, not a lick of it. And Medicaid then pays for the care. Now, you might ethically look at that as like maybe a way to skirt the system and make, taxpayers pay for it. But, well, I don't know, we're paying for the war in Ukraine right now too. We're paying for a lot of things that you probably don't want to pay for, but it is what it is. It's part of the code. And that is another way you can use trust planning. Stephen, where should we go from here? I mean, we've got this other chart here that we're going to get into, and we're going to kind of go through this a little bit, the S corps versus LLCs and some stuff, but we could talk retirement planning. And then what I want to do is I want to talk a little bit about like, how could you do this fractional CFO? How could you work with Zach and our entire team to do all of this stuff so that we really help you design everything you want. We help you manage it. We help you just continue to oversee it all. And you then, and like I said, you keep all your existing people. We just are a second set of eyes. Zach, being a CPA, is a second set of eyes for the tax return and all your tax planning. It's going to pay for itself. And actually, we know that so much that we've actually built that into the pricing structure, because we know after you meet with Zach, we're going to show you how to pay for the program without you having to go work more hours, do that second job, go out and mow the lawns and shovel the driveways like around here. So there's the link to set up a call. But Stephen, you think we should talk a little bit about entity structure, or should we talk a little bit about retirement?
Well, I mean, if you're not going to teach the snow plowing class any longer, then yeah, we could talk.
We got no snow. Otherwise, I'd open up that snow plowing class.
Come on, snow, let's go. No, I mean, for me, the fractional CFO is very nice because, you know, I obviously I talk to a lot of our clients, and I'm, you know, first touch with a lot of them. And, you know, one of the things that I hear quite often, especially now, you know, over the last 3 years, we've done an incredible job of just bringing so much education and strategies and information to people through all these webinars and courses and trainings and classes. And so I think for a lot of people, it's kind of like, wow, like, holy cow, like, where do I start? You know, like you just threw all this stuff into a blender and put it together, and now I got to start picking out the pieces and I don't even know where to go. And so because of that, you know, the fractional CFO, to be able to work with somebody like Zach that has experience with all of this for an entire year and just get all of it organized and put together. I mean, it's a difference in fast tracking something or kind of stumbling through it. And, you know, I've always been a big fan of that because, you know, I could hop in a car and I know if I drive north, I'll eventually run into Buffalo. Like it's just geography, right? Or I could hop in a car, punch into my phone GPS, and I could get there a lot faster. Yeah, I'm going to get there both ways, but one way is a lot more efficient. And to me, that's at the end of the day what the fractional CFO is. You know, you could talk about it, you could do this and that and this and that. At the end of the day, it's where do you want to be and how fast do you want to get there. And that's the bottom line with it. So, you know, I love talking about, you know, all the different things that we look at, you know, how to be smart with your money, eliminating the wealth killers like inflation and volatility and taxes. And, you know, this all goes along with that. So, you know, just being smart, the money we're making, you know, it only stretches so far. But if if you can be smart with it and make it stretch farther, why wouldn't you do that? And you do that by keeping more of the money that you're making, taxes, by investing it smartly, eliminating volatility. You look at like actual returns versus average returns and how financial advisors play with that stuff. And at the end of the day, though, it's that same dollar. What can you do with it? Because you're working so hard for every single one of those dollars. Why would you not be as smart as you can be with every single one of those dollars? I mean, maybe it makes sense to put money. I get this a lot. Like, should I put money in an IRA or into an infinite banking policy? Well, I don't know. It depends on your entire overall picture. And for me to determine that with you, it would take hours and hours and hours, which I don't have the time to do. And quite frankly, like, so you need to have somebody like Zach that has the time, has the wherewithal, and is able to guide you along that path to make things happen. So we can go through all of it, but it's just, at the end of the day, it's a beautiful thing.
No, and that's the thing, is a lot of people come across and if you're starting off, you have all those things, is when you on the tax side or the planning side, is if you're just a W-2 employee, you have that going through, there's very little that's available to you when it comes to your taxes, different opportunities and things that you have, because there's very few deductions you can take. You have the child tax credits. You can have that, basically expanding your family, doing some charitable contributions, different things like that is about all you really can do to have a huge impact on your tax side. But then it's just simply having, as we talked about, just a side gig. Anything that you're doing, and whether it's even you're loaning money on PMC, you're buying your first rental property, doing something like that. You have little knickknacks that you make at your house that you used to sell as just a hobby, but it's something that you now want to just start selling it on eBay or different things like that. Just having that extra little side business to be able to do that opens up such a significant amount of different things that you can take as write-offs and do tax advantages, and to be able to set up for your tax planning, for your legacy, right, for your family, because there's things that you can start to set aside for, pay for your family, do different things like that. That the trust structure and just the way that the IRS allows you to do different things, just by simply having a small business. And I think I read something, it was during COVID, that now there's, I think, close to 40% of Americans have a side business or something like that they've now gone to, where they have, say, what would be just kind of what might be considered a basic Schedule C on your tax return. And those people, though, are likely, so they don't have that CPA or that resource to be able to come in and say, now how can we optimize that? What can we do to make you keep every dollar that Stephen talks about, keep all those dollars that you're making, because we work so hard to make them, that we want to keep them as much as possible and put them to work to, again, make more dollars for you as we move forward.
Yeah. And keep in mind, like, Zach is in our internal team. Like, he's not an outside company. Now, Zach does have an accounting business and stuff, right, Zach? But when it comes to the fractional CFO, like, he's our internal team. Like, he's in Buffalo with Chris, works out of that office quite frequently. His sister does all the bookkeeping for the companies and everything. So, like, it's part of the family. So when you're working with Zach, you're working with us, like our team. So he doesn't have like an external website on Fractional CFO or his own podcast. He's us. So anytime you think Zach and Fractional CFO, that's Money School, Chris Naugle, the Money Multiplier, Snaggy, whatever you want to call me, like, that's us. So we're all part of it. And that's a good question, what you're asking there, but I just want to make that clear. And that makes a big difference, because, when it does come to that overall picture and the strategies and everything that we're teaching, again, like, if I tell you to self-direct your money versus I tell you to open up a big, huge, high-dollar insurance policy, I'll make more money on an insurance policy, but that's not where I'm going to guide you to if it makes more sense for you to put money into a solo K, for example. And so we're always going to do what's right for your situation. So on a 30-minute call with me, sure, I could pigeonhole you into the stuff that would make us more money, but we don't do that. And so that's why it's so important to understand that whole picture and understand all of these strategies, so you're doing what's right for you at the end of the day.
Well, that's also a big piece of this program as well, is that myself as a CPA, right, I'm ethically tied, that I cannot refer, direct or advise on anything that I wouldn't give myself the same exact advice given the same situation if I was in the same exact situation. So, right, as you talked about it, there's different things that we can direct you to that may make Money School or whatever it is more money, but that's something that doesn't matter to me, because I can't do it. I can't advise on something that would be something that is driven by that, or is different advice that I would give to myself in the same exact situation.
How many of you have children? Just want to see how many of you have kids.
So does
Dog doesn't count. 4, daughter. So out of 141, we've got a lot of people here that have children or grandchildren. Can I ask a huge favor of everybody? This would mean the world to me. You know, we pour our heart out every single week, asking, really for nothing in return when we do these webinars. But now I'm going to ask for something. If you care about your children, would you all do me a favor? And right now, I just put it in the chat. Can you copy and paste that? What this is this to me, so far in my life, this is my greatest accomplishment. It's a TEDx talk that I did. And the TEDx talk is called Rethink Money. It's a letter that I wrote to my daughter, and it literally embodies all the things we should be teaching all of our children, and our children should be teaching their children. And if we're ever going to change the way this whole financial mess happens and gets fixed, it's going to start with our kids, not us. We don't have enough time to fix the whole thing, but our kids and then their kids. And if we start teaching our kids now how money really works, how to take back control of their money and how to rethink money, we have a shot of changing the future of money. And I know that sounds silly and pie in the sky, but you know what? I'm a big thinker. So could you all just do me that? Just copy that and please just watch it. It's only 16 minutes long. It would mean the world to me. And if you do watch that video, one other thing I'd like to ask you to do, if you have children over 5 years old, can you ask them to watch it? Just ask your children to watch this. There's nothing to buy, nothing at all. Just a TEDx talk. So that's my ask for today. So I really appreciate it. Now let's get back to the regular scheduled program here. Let's talk a little bit about, this right here.
It's something that you do have a business. It kind of went to, and it won't really much go into the C Corp piece, but I kind of talked to it a little bit about even just your general business owner doesn't even know the difference, right? They'll go to their lawyer, the whatever, and they say, hey, I just want to create an entity. I want to create an entity for myself, and they'll set up a single member LLC, typically, that to the IRS is disregarded. It doesn't actually exist. It is a separate entity, and you'll file a Schedule C, but there's not significant protection to it, and it's basically you just with a name that's to it. And so the reason for that is that every dollar that you make in that LLC, as long as it's active. So say you're a CPA, a painter, you provide service, cleaning services, different things like that, and that's the business that you have. And your profit at the end of the day is $100,000. If you have an LLC, what happens when you push that through, you're going to pay full taxes on 100,000. And what that is then you're also going to pay self-employment tax, which is an extra 15.3% on top of what you're already going to pay federally and state on that $100,000 is also going to be charged in a self-employment tax of 15.3% on this full 100,000.
How many of you want to make 15.3% on your money? Just asking. It's a pretty good return, right?
So on a basic LLC, this is kind of where most people sit in this general structure, and they don't know that all you have to do in many cases, and usually you have to, there's certain standards, and usually you don't want to directly, right as you get created or go through, and usually you're not an S Corp right from the start. As you do get set up as the LLC, that's fine, but then most people will just set it and leave it and won't realize that at one point it becomes very advantageous to roll their business over to being an S Corp. And I would say, to me, usually that threshold is between $30,000 and $50,000 in net profit. So this isn't just revenue. This is what your profit is after you take all your expenses, everything that you have there. And so what happens then is, as an S Corp, what you do is, it's because it's a completely separate entity. The tax return itself is very much the same as this. It's more an informational return. You put that on there. So it does have a separate return. But what you do is then you determine what is a reasonable salary for myself. Typically, you'll see that it kind of the IRS throws it as 30%, but that's why we talk about much of, you want to make sure you're making at least $30,000, $40,000 in the business for it to make sense, for the tax savings to make sense. But you can pay yourself a $40,000 salary. You determine that's the regular wage, the wage that makes sense for what you do for the business. And very rarely, I've done a lot of readings, a lot of research, very rarely does the IRS ever challenge what that number is, only if it's something where you're maybe making over $1 million in a business and saying you're paying yourself a $10,000 salary. All you have to do is just declare it as a reasonable wage. And so on that 40,000, you're still paying these three different pieces, right? Because you're paying both sides of the taxes. as it goes through, and then you're paying federal and state, just as if you had a W-2 job. But so then you're paying all of those pieces on that. But then the
But
great
you're only
part
paying it on 40,
on the
not on
40,000.
100.
So then what you do is then the remaining 60,000 of that 100,000 gets passed through to you as a distribution, which will you'll still pay the federal and state tax because it's seen as regular income, but you save this entire 15.3% to do there. So I believe that's what, maybe
I'm
about
doing the math real
9,000.
quick. Yeah, so you're saving yourself right there, $9,180.
So you're saving
9,000.
yourself just simple $9,000 in taxes on that 15.3%. As you go through, even just a simple change in structure. And all you have to do to actually switch over from this to this is file a piece of paper. File a piece of paper, you let the government know, hey, I want to be taxed as this now instead of this. And crazy thing about it is not many CPAs in that will tell you that there is actually a piece of the tax code that you can make this declaration in December and backdate it for the start of the year.
Really?
So if you find yourself, right, because if you're like, hey, I don't normally make 30, 40,000, I'm not there. And then you all of a sudden you have a year as you start to see that growth and you think that future growth is going to be there, you can actually back elect for the year. You then will have to, go back, pay yourself the salary and do that. But is this even just in a simple piece of it is a great way to save on taxes. Not to mention there's with an S Corp, there's accountable plans so you can reimburse yourself for cell phone. You like talked about the Augusta rule, how your company paid you for having an event at your house. You can have board meetings and different things at your house that total 14 days a year that become expenses to the corporation, but not income to you. There's so many advantages to this that all there is a simple piece of paper. But most people, they create this LLC, they just set it aside and they take it to their tax advisor, they go through it, and they don't ever sit down and say, hey, maybe it's time for us to start considering this. Let's talk about all the different expenses, the different deductions and things that you can take as part of this. And so even just that, wouldn't you like to have, $9,000 back in your pocket that you're not paying to the government, that you have to then turn around and take and invest that. So
I would take this $9,000, and I don't know about any of you, but I would take this 9,000 in savings and I would go open my 10th IBC policy. Sorry, I'm trying to hit that number 10, and that's found money right there.
As you go through to get to this 100,000, even before we get to that, there's so many different tax advantages that you have of being in a business where you can start to take deductions for your auto, right? Any mileage, different things that you're doing that's there. You can pay your kids in a business that you have there. If you have children and you have a business that you can pay your kids up to $12,950. It was in 2022. Without having to give them a W-2, without having to claim that, becomes an expense to the business, but is not income for you and or your kids. They just have to actually do something for the business. So you want them to shred papers, you want them to clean your office, you want them to show up in a YouTube video that you're doing, a Facebook
like
Live,
that. Steven's
different
doing
things
that.
like that. Yeah, right. So you basically pay them a reasonable wage for what they're doing. And as you talked about it here, right, you pay them that $12,950. They can take that $12,950. You can
Put it right into the IBC.
funds a policy for them, right? Might be something that they're doing, already starting their retirement planning at the age of what, 4, 5, 6, have that piece, have it be something you open up open up a Roth IRA for your child. You can have the child can be less than 1 year old and have a Roth IRA in their name. So there's different things that you can take, the tax advantages that as it passes through, you just continually build healthcare plans, different things like that, that are all different things that we can talk about in this program, opportunities that just when you go to your regular CPA, your normal financial planner, your normal things, they don't talk about all of the ways that you can make the bottom line, what you pay in taxes, much, much lower, but also plan for the retirement, plan for investments, do all that. They don't bring that piece together that this program really can do.
But here's the other thing too, folks, and this is important. Your CPA might talk about this, but they don't show it in application like he just did. Like that wasn't hard, right? But he showed it in application here. So you had that savings and hey, if we pay the kids, that's $12,950. But then in application, here's what we should do with that money that might make really perfect sense for what you're trying to do. And the other thing, how many of you actually meet with your CPA or your tax professional before January of the following year? Any of you meeting with them in December or November? I bet you not many. So if you wait till January, you just missed that opportunity. Remember that opportunity to convert? But if you work with someone like the fractional CFO, you won't miss that because it's literally somebody else helping remind you, hey, we got to change this. So that these are huge, huge things. So I'm going to get to questions in a second. I want to read this, what Josh put up. This is by Henry Ford. It is well enough that people of this nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning. Henry Ford. Please have your children listen to my TEDx talk, because before I die, I have a feeling there's going to be a revolution. And that TEDx talk is going to pave the way. But here's the deal. Let's dive into the fractional CFO. We're going to get to your questions, but I want to lay this out really quick because there's nothing difficult about fractional CFO and how we did this and how we priced it. We really looked at it from what kind of value is the fractional CFO going to bring to our clients? And we said, all right, well, what would that value cost? And then we backed into, well, how many hours is that going to take from Zach? And we had to figure this whole thing out. And then what are we going to give them? What are we not going to give them? But to make the whole thing as robust as possible, we priced it with very little profit in it. So the profit that we make on it is relatively low after Zach gets paid, after everything gets paid. And I'll explain that in a second, because we really wanted to basically put it out there so that everybody that needs this can do this. Now, I'm going to tell you in the future, we already talked about this. It's not going to, we have to increase the price. We're not going to get into that, but we have to increase the price. And for any of you that kind of nailed it, the name of that book is The Missing Piece. And I wanted to use this because this is the missing piece. It really is. The fractional CFO, there's two different packages. One is $10,000. The other is $15,000. And it's very simple to see the difference. Really, you don't get any less services with either one. The only thing you get with the $15,000 is you get to join us for the Experience Mastermind. So the next one we're doing is sold out, but it's in April, and that's going to be in Mexico, at my place in Mexico. The next one after that, we're going to do probably in Las Vegas, and we're going to go race Ferraris and Porsches and do a bunch of other cool stuff. We've been talking about what kind of experiences can we do and have with that group. The extra $5,000 you're paying is not for any additional services outside of you get to take a trip with all of us, with Zach, with the entire team, and you get to spend that time doing really cool experiences. So the $10,000 is an annual amount. Okay. So the first, and it's actually just the first year.
First year. Yeah.
Just the first year, $10,000. Okay. And then after that, if you want to continue on, then it's just going to basically be like a retainer type of setup, which do we have that figured out yet or no?
I don't think we do.
We don't have that figured out, but it's not going to be 10 grand the next year.
No, it's going to be much lower amount.
Yeah.
That's going to basically be a time sensitive, how if you want to meet quarterly, if you want to meet monthly, different things like that, we're going to have a different structure for that, but significantly lower than
because the majority of the work with the fractional CFO is in all the planning and all the time of figuring everything out, organizing everything, and really building the structure and building your team. And then after that, it's really just sort of just monitoring and making sure that you're doing the right things, making sure, everything you need to do from a tax standpoint is in place so that in January or December, I should say, you can get your taxes pretty much in place and ready to go for your CPA. So the 10,000, but here's the thing, like, we know this works. We got a bunch of clients on here that are already using this. We know it works. We know what the savings are, and we know how it's helping people. So can you just tell them like you don't need to cough up a check for $10,000? Because some of you are like, oh, I can't write a check for $10,000. What if you knew it was 10 grand or 15 if you want the experience, but we're going to show you within the first one, maybe two meetings with Zach, exactly how you're going to pay for the rest after the deposit. Do you want to explain that?
Yeah. So the initial deposit is $2,500. So that's to get into the program. That's for us to have the full financial review, have our first planning call. And it's once we have that full financial review and have the planning call that we'll actually go through and figure out right where the rest of this is going to come from, whether it's going to be best to do it out of a interest-free credit card that you may be able to generate. If you do have any policies that we can maybe have access to a policy loan, different things like that. But we go through the full financial picture for me to say, hey, this is what the amount is, and to make sure and to have that the ROI in this program is exponentially higher than what you're going to have here. And so we can build that program, have planning steps, determine where it is that we're going to be able to generate this additional money, additional funds for the program, and then well over that for the planning that goes forward. But again, for us to figure that out, need to have that full financial structure, have that plan to be able to generate that piece.
The first step, if this is something you think would benefit you, you're going to jump on a call
And yes, this would be a tax write-off
Oh, yeah,
as well.
good,
Yep.
good call. So Jeff,
Yes.
yeah, definitely a tax write-off. And your CPA doesn't do that. Yeah, most CPAs are not doing even a fraction of what we're talking about here. Hence, fractional CFO. You're basically playing right into the name. But you're going to set up a call with Zach, and you two are going to talk, and he's got some questions he's going to ask you, and you're both going to determine on that call whether it's a fit. Okay, there's not going to be any hard selling at all.
I
There's
know.
no selling.
I find out what it is. We go through the details of it, what I can do, and it's from there. I'm a CPA. I'm a failed salesman. So there is no hard sell at the end of it. I just do the information and talk to what the opportunities are that are there. And if it's right for you, that's the determination for us both to make. But I've turned people away that I've talked to that I felt weren't either ready for the program or just it wasn't there from that call. So we have had people that I've said, I'm not sure that this is going to be a fit. So we go through and we're honest and talk about all the information on that side. So,
and pretty soon we're having Mr. Sislo put together a really nice brochure that we could email out, but that could be a couple weeks out to 30 days out. So for right now, the call is the best thing we've got, and we're going to put that up. Tiffany Charles, Tiffany.
Yes.
She said, it's been an amazing experience. Don't know where to start, but have paid off 3 credit cards, got a policy, and have 2 deals in PMC. So that's one of the fractional CFO testimonials there, and I'm sure there's a bunch more.
Has her own lending business. She's joined us she joined us in Utah, and she's going to be in Mexico as well, and she's really grasped it and taken off with the program.
Absolutely. So, and there's a lot of other perks too. We've got other arrangements and other things we've worked out with other people in our network. Like, for example, entities. So we're working on a program right now where through the fractional CFO, you're going to be able to get a new entity set up at just cost, like whatever the state filing fees are and whatever the legal fees are. So like, instead of it being $1,200 or whatever for that, with the fractional CFO, it might only be $400 or maybe $600, depending on the state filing fees and what that cost is. So we're developing all these relationships to help you pay for this by saving you money, not only on taxes, but also saving you money on all the stuff that you'd normally get, that now we're building relationships to try to give that as part of the fractional CFO. Stephen, do you have anything you want to add to that?
Yeah, I mean, I can read a little bit. This is from one of our clients. I won't say their name, but the biggest thing is every client is so different. So it's very custom, but it's all about just making sure that everybody's happy with what's going on. And so this person's journey started a few years ago with Chris and Brent Kessler, before getting into fractional CFO, obviously. She has a very well-paying job for the FAA and does aviation safety, where she works with manufacturing aircrafts and parts and works with a lot of aviation entrepreneurs and develops the quality of systems. And she loves her job, and it's a great job. But at the same time, it's well-paying and federal retirement and everything, all the benefits that go along with that. She's always had that kind of entrepreneurial spirit and similar, she kind of gets that from like the aviation entrepreneurs she works with and just loves that whole feel of being an entrepreneur and doing something on the side. And that's what started drawing her to what we do. And so she's been working from home 3 days a week prior to the pandemic, and then was able to work full-time from home once pandemic hit, which is like anyone, when you're home, you can put on podcasts and videos and be able to learn the background. So it's been really helpful. And then she started to learn a lot from us. So she started to join and take action. So she started to learn about trading with Sodi and the 10-10 program we had. She would attend the 3-day workshops, virtual workshops that we did. She joined Private Money Club. She's lended to Chris Rude, has done land flipping now. She has a policy with Money Multiplier. She's doing self-directed investing and has a self-directed IRA with Horizon Trust. She's doing gold and silver, and a few other side businesses that she's been working on. So the bottom line is where Zach and the fractional CFO has helped is stringing it all together. So it goes back to like what I was saying earlier. We have all this stuff, but how do you make it all work together? So what they've done is they've taken all of this and gotten the snapshot of it, and now they're reverse. So Zach and her are reverse engineering it so she can retire the way that she wants to, even though for her retirement is continuing to build businesses and continue to make money while she can, but she wants to have that option of doing so. So that's what Zach and her are currently working on, is reverse engineering that and making that goal happen for her. And The other thing that's been very important for her is having the independence of, she was married for a very long time. She's been divorced for a long time and on her own for a while. And she likes having that ability now of that financial stability where she's on her own. She's made it herself. And she said that Zach's really helped kind of bring all that together and make her feel confident in everything that she's done. And just being a part of our entire community and everything that we have has really helped her. Because she said in her direct circles, her friends and family, they don't do this stuff. They kind of think more the traditional way. So it's been a real blessing that she's had people to talk with and communicate with and bounce ideas off of when it comes to working with Zach. So that's just one student I wanted to share.
So she just commented asking if you would co-author her book. That was pretty good.
I guess we know who it was now, but yeah.
Yeah, we're always trying to, just kind of make sure if we don't have permission to use something, not do it. But raised her hand, and so now you guys can all do that. So, that's the Fractional CFO program. We're really proud of it. We're going to keep developing it. The other thing that the Fractional CFO program is going to eventually be in the future, once we kind of get this all dialed in and really get processes and procedures perfected, we're going to move this to a business structure as well, where we're going to offer a Fractional CFO to business. Right now, Fractional CFO is for personal and business, but relatively smaller business. But we're going to offer packages which are going to be for larger companies that can't afford a CFO, but they want all the things that a CFO would bring. So that's going to be coming inside probably the next year. So stay tuned. If you got a business and you're like, oh my God, I need a CFO, I can't afford a CFO. Well, you can have a Fractional CFO in your business. But for right now, like we're dialing this in with individuals and small businesses. And eventually the second phase will be a business structure, which will be significantly more expensive, clearly, because obviously it's going to be a lot more involved and detailed and require a larger team to do that. But I think,
and that's where that term came from, right? Is typically fractional CFO has always been a business piece, right? And that's for somebody who has a size business but doesn't have enough money to pay a controller or CFO full time, and they'll hire what would be a term to fractional CFO who comes in 5-10 hours a week, makes decisions, reviews financials, does things like that. But and where the idea and the piece came from, meshing with what the family office can provide to the top 1%, is also that the individual doesn't have that, right? Doesn't have that somebody the piecemeal that can come in. They don't have the ability to handle the cost of what would be the family office and or the resources to even qualify for it. And I think Stephen always calls us the personal CFO because he didn't like the name of the fractional CFO piece, but that we were able to take that model for what has worked for businesses and roll it into to help individuals, because there's such a large need for the individuals to have that available in their life that they don't have.
yeah. So let's get to some of the questions here. Let's see. Yes, there will be, Tina, there will be a replay. It'll be on my YouTube channel. So it'll be probably up on the YouTube channel in a couple of days after it gets edited. All right. So Chris G, Zach, why not a C Corp versus an S Corp?
That is that's a loaded question. I'd say there that depends on, what the business is, what the existing structure is, what you're doing for the business. But a big piece of the difference between C Corp and S Corp is that on a C Corp is usually with more shareholders that you'll have with that, but a C Corp also gets double taxed, right?
Mm-hmm.
So a C Corp will pay corporate income tax. And then anything that you pass through as distributions through to any of the shareholders gets taxed on the personal income tax side on that side. So again, it depends on, size of the business structure. That's something that, is tough to answer without knowing a lot of those details. You can follow up, with me afterwards, but that's usually the significant piece is the structure, what the business is, and then how you want to handle the taxes and the double taxation that happens on the C Corp versus that doesn't happen on an S Corp. Because an S Corp does not get taxed on the corporate level or the entity level. It only gets passed through. It only does on what passes through.
I've always wondered that same thing. That helped a lot. Tina said, does one get all of the services you're describing as a member of Private Money Club, or are they separate services with associated costs? Yeah, I think we already kind of answered that one. It's definitely separate. Private Money Club is its own standalone thing. I would be curious if there are any benchmarks to determine if a trust conversion needs to happen.
It's tough because, right, as we talked about, there's so many different kinds of trusts that it really, really depends, right? On the basic one that we had there, even just a basic living trust to have it for asset protection on its side is there. But then when you start to talk about the business trust structure, a family trust structure, that larger piece, I know what Silman requires, I think a 100K in federal taxes that you pay per year or so, or higher there. So it really talks, it's really consideration of the really complex trust structure is to the point of, is what you're saving in taxes worth the cost of implementing the entire structure, going through all that? And there's a tax game to be played. Obviously, once you get to that point, there's less of a tax game to play. But there's so many different trusts and trust structures that it really depends as to what you're trying to accomplish within the trust.
So Andy said, does Zach have a website or podcast? Do you have a website?
I do not, no.
Yeah.
I have neither of those. In one of these things, as we keep rolling with the fractional CFO program, is we do have Slack channel. So everybody who is a client has the ability to talk. It's been quiet a little bit, again, as a pilot program, but one thing that I've really wanted to do is say like maybe a 15-20 minute webinar or something like that, recording that very much talks about, like we did with the S Corp versus LLC, talk about auto deductions, talk about different things like that we can go through. And so it will be posting to the Slack channel as part of that. But that was kind of where it was going to kick off and start to have some of those recordings.
Yeah, and Andy, what we're going to be doing too is we're going to be putting it up on the Chris Naugle website. We're just waiting for all the branding and everything else and the logos and everything. We'll get that up on there. The only podcast is the Money School podcast, and that does have a lot of stuff that pertains to this. I should probably bring Zach onto it and get some of this stuff dialed in and recorded up. So mark my words, we'll get that done. All right, Scott said, I thought the LLC can be taxed as an S Corp. So is that still beneficial to convert? So I think
Yep. So yes, LLC. So you declare, that's basically you declaring the LLC. Do you want it to be taxed as a disregarded entity, or do you want it to be taxed as a corporation or taxed as an S Corp? So it's just making that designation. The S Corp underneath an S Corp is typically it's going to be an LLC that has either converted to it, or if you create the S Corp just from the beginning, but it's basically you making the declaration that your LLC wants to be taxed corporation wise, rather than something that either, if it's solely owned, is something that just shows up on your general tax return on a Schedule C, or if it's, say, a partnership that you're filing a separate partnership tax return that sends a K-1 to each of the owners. The tax differences are here, and there's also many other tax plans and different things that you can do in an S Corp or in a corporation that you can't in an LLC. Yeah. But it's more just a designation of what you want your LLC to be taxed as.
Yeah, and I know, Scott, all my LLCs that I've ever created, we've done that election, that S Corp election. Then we just take a paycheck from those,
because if you're just as a startup, right? If you're at a point where you're only making $10,000 a year or whatnot in profit, once you have all your expenses and you've started to pass over personal expenses over to your business, which is the good reasons to have a business, as you start to be able to deduct personal expenses, is your LLC, if it's only making 10,000 or so, it's very tough to take advantage of pay yourself a reasonable salary and then have something left over that you're getting the tax advantage on. So that's why I say it's usually a profit of 30 to 50,000 where you want to start to have the conversation to make the conversion.
Put that 30 to 50K, and then you file for S Corp. So Deborah asked, let's see, extra costs for setting up the trust with the fractional CFO. That's a loaded question because every trust is different. I mean, basic trusts are not expensive, but then there's complex trust structures, which I know mine was $95,000. So you can get pretty elaborate. I mean, and there's more to it. That wasn't just all trust setup, but it's a tough one, Deborah. I would book a call with Zach and talk about your needs, your goals, and what you're trying to accomplish. And then we could kind of back into, all right, what could that trust structure cost? Mm-hmm. Because when I say that, oh, your trust structure is going to be $95,000, you probably gasp, right? But you probably don't need a complex trust structure like what myself and Devin and Joseph and Brent have. So
whereas a basic revocable living trust it's very cheap. And lawyers can usually do that pretty quickly. So it depends.
So Andy said, let's see. Oh, Devin Burr made a business structure video on TikTok. Is that what Zach set up for him? No, Andy, what Devin just did, that TikTok he just did, I actually helped him with that a little bit. That is our trust structure that we use, that $95,000 complex trust structure. So that would only be for people that that's more of a tax planning structure and a protection structure. That you wouldn't qualify to do a structure like that unless you're making, or actually should say paying about 100,000 in federal income tax. So like your federal part of your tax bill is about 100 grand. That's where that starts to make sense for you. Otherwise, mathematically, it's just not going to pencil. So that's the one that Devin Burr was talking about. But there's variations of that. Like you may not need the foundation. So that might only be a $30,000 structure if you don't need the foundation. You might just need a family trust or a living trust, or gosh, there's a whole gamut of trusts. It just each trust or trust structure is to solve a different problem. So that isn't the one, but it's a good question. And I'm glad you watched Evan's video. Yeah, so there you go. The spendthrift trust. We could definitely figure that out. So Deborah, just book a call with Zach and we'll figure out what that spendthrift trust would run and make sure that it's applicable for what you're trying to do. It sounds like you've done your research, so we can get with our folks that build the trust and figure that out for you. Roberto, can't wait to do this. Still waiting on my policy underwriting, PMC and fractional CFO next. Awesome. Thanks, Chris, for bringing the quality program. You're very welcome. We've been working hard on this one. This one's definitely kind of been being worked on for quite a long time. I don't know, you want to give your phone number out?
It's really the best way to do it is go through the link
link.
there. We'll have the conversation, and then from there also direct emails. So if there's I know there's one or two questions that we passed off in here is simply Zach, ZACH at chrisnaugle.com as well. If you have any quick general questions, but that link will set up either a 30 or 60-minute call with me as well for us to go through that.
You can either email them right there at the top or just book a call and schedule that. So Stephen, did we miss anything? I know you were avidly typing away some of the questions there that were coming in because there was a lot coming in.
If there was any
I don't know. I
questions,
think we're good. I think we hit everything.
Awesome. And folks, this program, like I said, like right now, 10,000 or 15,000 if you want to attend the experience. It's kind of just a bolt on. So really the fractional CFO is 10 grand. If you want to go on that trip and, because that trip sells out every time, the experience mastermind. So being in the fractional CFO pretty much locks your position. I mean, if you're in fractional CFO, you're going to the experience. No ifs, ands, or buts about it. But if you're not, unfortunately, like we did sell out really early this time. And I've had a lot of people texting me asking, can they get in? And I just found out from Shauna, she actually was pretty aggressive about it, saying no one else can come to the experience. Because me, I'm like, well, let me see if I can make it work. Let me see if I can get you in. Maybe there's an extra spot. There is no more spots, period. But if you're a fractional CFO member, well, we'll see you in Mexico for the experience.
And I got good news for Roberto. He was just saying he's waiting on his policy underwriting, which was just approved. So
hey, how about that?
Yeah, I'll send that over to you so you can take a glance and we'll get you going with it.
That's awesome.
And I think really the one thing to say about this program, right? And can you find the fit? Does it fit into there? And it's the great thing about it is fully customizable,
Yeah.
right? So we take, as we talked about at the start, where you currently are, what your goals are, where you want to get, and then based off of what is there and the assets that we have to get there, the plan is fully customizable from there, right? And we always talk about the investing and doing things that like and understand. So even in those conversations, there may be some of these opportunities that don't fit for you, that don't go there, that don't have those pieces. And Tiffany commented in there, and I'd say that she is at one range where a lot of hers was she just did her first policy. She was building out of debt. That was the model that we did with there. She didn't have a business, but we do have clients that have a couple small businesses, do have pretty large entities or consulting businesses that they have, that a lot of what we talk about is even talking about in the businesses and how it flows through to personally. And then we have some clients that it's fully the personal piece and how we do there. So it's very customizable, and that's what I love about the program and why it's been very tough to market is because there's so many different bullet points or so many different things that we can talk about that we can assist with, that fine tuning it and into what it would be on a brochure is tough because of how customizable it is.
Love it. But here's the marketing kit that we're going to send off to Mr. Sislo, and he's going to create an awesome brochure. And that awesome brochure isn't going to be this 30-point tax strategy checklist. This is all stuff that you kind of get when you work with the fractional CFO. The brochure is just going to spell out, here's what you get, here's how it works. This is where you are going to start to change your financial future. So folks, I think that's a wrap for it. I appreciate all of you joining us for today. And I appreciate you learning something and actually seeing that there is a better way for you to do what you're doing. You just got to mimic what the wealthy do. And that's exactly what we're bringing to you. And we're going to continue to keep bringing it right up to this afternoon at 4:30 p.m. We're going to be doing it's coming a very popular show. It's the Ask Me Anything Happy Hour, where all we do is field all your questions. We get a little silly sometimes, and I hope to see all of you there. And also, I want to say thank you to each and every single one of you for watching the TEDx talk. Share it, give it to other people, tell them to have their kids watch it. Let's keep that thing going so that more and more children and families can start to turn around the next generation's knowledge when it comes to money, because it is really important that we start to rethink money, and that video is the catapult. So thank you for all of that. Stephen, thank you for your time. Zach, thanks for your time. See everybody later. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.